Hi, this is Lara at Elliott Wave Gold with an extra video update for you for the trading session Wednesday 27th of April. Gold is still range bound, but today on balance volume is indicating that we might be about to see an upward breakout. We need to see a new high above 1270.08 that would indicate a possible upward breakout should be underway. And then when we see a green daily candlestick move comfortably above 1280 on a day with increased volume, that would be a classic upward breakout. Let's have a look at the wave count, the Elliott wave count first. We'll do technical analysis last for this video. Gold has had a big trend change down here, possibly at supercycle degree, and supercycle A subdivides as a double zigzag, so supercycle B has a minimum requirement. To have a look at that, you'll have to go to the historic analysis for gold. I'll focus on the midterm picture for this analysis. From this low to this high, intermediate wave 1 subdivides very nicely as a 5-wave impulse. We had expected intermediate wave 2 to be a deeper correction, but so far it's very shallow, and it looks like it's going to end as a very shallow correction. I had expected it to be more likely to reach down to the 0.618 Fibonacci ratio. That's the most common place for a second wave to end, but they don't always have to. This one looks like it's unfolding as a double combination. The first structure in the double is a zigzag, labelled minor wave W. The double is joined by a 3 in the opposite direction, a simple zigzag labelled X, and there are two possible structures that minor wave Y could be unfolding as. I'm labelling it on the daily chart as a triangle, but the second hourly chart is going to look at it as an expanded flat. That would be A, B, and C down to complete. Minor wave Y, if it's a triangle, could end in just one more day. If it prints one more daily candlestick, then intermediate wave 2 will complete in a Fibonacci 34 days or sessions, and minor wave Y within it, the triangle, would complete in a Fibonacci 13 sessions. That's a reasonably common expectation for gold. It somewhat often has waves which exhibit Fibonacci numbers in terms of duration, so it doesn't have to do that, but it's a tendency gold has, so let's look out for that. Look out for a possible end to this consolidation after one more daily candlestick, and when it's done, look out for a possible upward breakout. How will we know when that's happening? Let's have a look at the first hourly chart where minor X ends up here. This point here, we will know that's probably happening when we see a new high above 1270.08. If minor wave Y is a triangle, then it's unfolding as a running contracting triangle with a zigzag for A and B and C, a double zigzag for D, so we need a single zigzag most likely, but a single 3-wave corrective structure down for E. The most likely place for E to end is to fall short of the AC trend line. That's the most common look for an E wave of a triangle, but if it doesn't do that, the other possibility, which is a bit less common, is for it to overshoot the AC trend line. Minute wave E of this running contracting triangle can't move beyond the end of C below 1227.39. What happens if we get a new low below that point? Well, this is the other idea. Minor wave Y might also be an expanded flat. When you think a triangle is unfolding, it's absolutely essential always to consider alternates. Triangles are really tricky structures, and quite often it's not until they've finished and price breaks out from the triangle structure that you can be clear on exactly where it began and ended. And sometimes, well, quite often, what you think is a triangle morphs into some kind of other corrective structure, often a combination, so it's essential to have alternates. So this is my alternate. If the triangle doesn't end as expected, what other structure could minor wave Y be? It could be an expanded flat. We still have a 3, this is A, a 3, this is B, and it's over 1.05 the length of A. It's a 1.2 length of A, within the normal range of 1 to 1.38, and longer than the minimum 1.05 for an expanded flat. For an expanded flat, the most common ratio between A and C is 1.618. C will reach 1.618, the length of A, at 1207, and that would see minor wave Y in pretty much right at the same level as minor wave W, which was at 1208, and that would see intermediate wave 2 move sideways. Combinations are sideways structures, so the second structure in the double should be expected to end pretty close to the same level as the first. In the case of the triangle, it'll be a lot shallower though, because the E wave of the triangle has to be. And so if we see a new low below 1227.39, the triangle would be invalidated, would be expecting to see a 5-wave structure develop downward and complete for minute wave C. This would take a few more days yet to complete. We could have an impulse for 1, a double zigzag for 2, probably complete, 3, and then 4, and then 5. 3 would end about 1217, I expect. 2, if it continues any further, can't move beyond the start of 1 above 1270.08. Some classic technical analysis. Gold has been consolidating since somewhere back in about February here. During this consolidation, if we accept that gold entered this range back here, it's a downward day which has strongest volume, and that was telling us it was more likely that gold would break out downward than upward. Now, this trick using volume during a consolidation is usually pretty reliable for gold, but usually or often is not the same as always. Today, on balance, volume disagrees. It's breaking above this upper orange line. On balance, volume is my favourite early warning indicator of price direction from a consolidation. It's a fairly reliable one. With this upward breakout, that's telling us that price is most likely to follow and break out of this consolidation upward. For a classic technical analysis breakout, we would expect to see a strong green daily candlestick close comfortably above 1280, which is the upper edge of the sideways range, on a day with an increase in volume. For an upward breakout, we must see it show an increase in volume for it to be sustainable. Once we have that, I wouldn't enter up there. I would wait for a throwback and for price to find support at the line, and if it does that, that would offer a perfect entry opportunity with low risk to join an upward trend. We do not have that set up yet. That's still several days away, so patience is a good idea. Just before I go back through the rest of the technical analysis, with that in mind, I'm just going to point out the problem with this hourly wave count. Now, even if we get a new high above 1270.08, we will have reasonable confidence, some confidence, that we're probably going to get an upward breakout, but to enter a buy above that point would still be more risky than waiting for that classic technical analysis breakout. So if you do choose to enter a buy above this point, do manage risk really carefully. There is a risk that my wave count could be wrong and we would be jumping in before we get that classic breakout set up. Looking at the rest of this analysis, ADX is still flat. It's telling us there's obviously no trend. ATR agrees, so we have both of these indicators telling us the market is not currently trending, it is consolidating. The best approach to a consolidating market is to stand aside and wait patiently for a breakout before joining the following trend. Trying to trade a range-bound market inherently is much more risky than trying to trade a trending market, and it should be attempted only by the most experienced traders. A mean reverting system is best used in a consolidating market, and that's characterized by a few large losses and many small profits, and it's a lot harder to make a profit in this kind of market. Whereas a trend following system is much easier to profit from, characterized by many small losses and a few large profits. RSI is still pretty close to neutral, so there's still plenty of room for price to rise or fall, and stochastics is pretty much neutral, still room for price to rise or fall. That's all for me today with your gold analysis, and I hope that all of our members are having a most fabulous day.